Alright, I think got this thing going to where I want it to be. Anyways, Tyler Edwards here, Bodies and Wicks. This is a new thing I'll be doing. I'm just trying to find a new method of trading regarding Wyckoff. This is my first video, episode 1. Now, what this is designed to do, designed to look at some charts here, and we'll see if we can't find some Wyckoff in here. Now, if you don't know what Wyckoff is, he has a specific way of trading as to where you can see there is a phase A, a phase B, a phase C, a phase D. In each of these phases, you will see specific movements and specific tests within the market. And I don't completely understand it, and that's why one of the reasons why I'm doing this is because I feel like there's a lot of people out there like me. And if there's a lot of people out there like me, maybe we can work together and try to figure this out. And so what I'm going to do is I'm going to post some charts that I have found that could possibly be some part of the Wyckoff method, and we'll learn together, and we'll see if either I am correct or if I'm completely correct, or I know if I'm completely wrong. I'm not for sure, but first let's just go ahead and jump right into it and take a look at a chart here. Alright, so this first one I have up is the Australian dollar versus the US dollar. And so right now I have it out on a 4-hour time frame. It has been trending up since May, right? We got into June, it took a huge pump up. Now since, when was it? Probably somewhere around early June, yeah, very beginning of June. You can kind of see it hit that, what I guess they would call again, one of the psychological levels, part of the supply. The supply push is coming to an end, because you can see the divergence here in the RSI. So once you see the divergence here, you know that there's change coming, from my understanding of reading charts. Again, I'm only a few months in, so I'm not 100% sure, but I'm hoping I can post these videos and maybe somebody can help me out with what is going on. So let's take a deeper look into this. Alright, let's spread this out a little bit. So let's go ahead and get this off of auto. Now I have identified this as possibly a buyer's climax. Down here we have our test, right? Because now you're going to have an automatic reaction, I guess you could say. That is another part of the Wyckoff method, the AR, automatic reaction, and the test. Because now you're going to get into a trading range, which is what it seems like we have here. Delete that. So here to here, it looks like we have developed a trading range. Now within this trading range, we're going to have multiple tests. We're also going to have a what would either be a push, either a push into the higher side, right? Kind of give the traders a little fake out. And then it's going to come down and test and then move down, or it could be the opposite direction. We got this buyer's climax, we have this range, it could push further and then have a test and then go up. And then this is all in the reaction of reading these charts. So right now I think this one is playing out. I don't think that we have a full grasp on this one yet. But I do see something developing here in the Australian dollar versus the US dollar. That being said, if you guys have any questions, or please don't hesitate to ask me, because I'm probably going to give you the wrong answer, 100% the wrong answer. I have no idea. I'm hoping that you guys do. I'm hoping that we can learn together. We can find or create some kind of trading group out there. You know, maybe a Wyckoff group, because it seems like it's a dead art. I really can't find hardly anything about it. You go to like Trading View, and you go to the chat rooms, and everybody's just talking about the similar Forex. You know, your typical retail traders. And I can't really find much on the Wyckoff method. You can find quite a bit of videos on YouTube, but it doesn't seem like there's a support group out there, and I think that's what I'm trying to get at, is more about a support group. So let me go back to some more charts, and let's see if we can't find something else. Alright, so one of the most recent ones that I feel like did happen that I caught from a trader was EURCAD. Let me see if I can't find EURCAD here. Alright, and I got all these marked up right here. Again, this is on the 4-hour chart, and I'm just going to go ahead and remove all these markings that I have. And I'm also, let me see here. Now, I do know that the signal that was sent out, I'm going to go ahead and create a horizontal line. I do know that it was 58585. That was where we were supposed to catch the signal. And there it is. Wait, that was back in March. That cannot be correct, because this happened a few weeks ago. Let me go ahead and throw out another one. Throw us a coordinate. Maybe it was 5585. Because it almost seemed like it got near it. Oh, screwed up. It got near it, but it didn't touch it, and it just zoomed off. And I want to say this was it here, because it was inching up. I want to say it was somewhere around 485 or something like that. That was in the 300s, but it just took off like a bat out of hell. It got like 40 pips in no time, and I want to say that was it. That this was it here. This is the signal that was sent to me. That was that 5585. Where did it go? I lost it now. Why doesn't? Could seem like, oh, jeez. Yeah, okay, here it is. I think it was this here. Because I believe I had actually changed it to try to catch it to, I think it was all 5s. It was just, and it still didn't catch it. Which I thought if I dropped it maybe 3 pips, I would get it just because of the broker. And no, I still didn't catch it. Because as soon as it caught, it just dove. And the question is that if this was where they were looking at, what was it that caused that reaction? Now, most of Wyckoff method is it's the last push up, or if it's going to go down, it's going to be the last push up. That candle, that sponsor candle, is what's going to cause that, because that's where the traders are actually forcing that push up to unload. That way they can unload their previous positions, So it could have been from this candle. So maybe he saw this, and because it looks like if this was it right here, right, if this is the wick that caught it and decided to make it just shoot all the way down, right, just, and look at, you know, these, they act like magnets, right? So these point of interest, they act like magnets. So within the Wyckoff method, you have quite a few different things. One of them being your point of interest. Your point of interest is going to be your number one thing to look at. So if we're looking at this section here to be the Wyckoff theory, right, or the Wyckoff method, because if this is your test that also took off from it, you may have not caught a whole lot of pips, and eventually I think it does come back up. Well, no, it hasn't come back into it yet. So this is the one. So this still has the potential to continue to move downwards. So if that's the case, if this is the test that it came back up to, it found something in here. The Wyckoff method has played itself out in this range here. So let's just go ahead and mark some vertical lines. Well, no, that's definitely not it. Let's mark off some vertical lines in here, right? Somewhere in through here, right? I want to say is where this method is played out. So this is the case, then I'm going to remove this line because that's not the line I was looking for. This was the signal I was given, right? So I'm going to go ahead and remove this just in case. So let's just look at this and see what happens here in the Wyckoff method. Let me go back and show you that image, right? So here we have the distribution schematic of the Wyckoff phases, right? So you have the Byers climax, the automatic reaction, right? That's that BC and the AR, right? And then you have the ST would be your test, your second test, right? And it's continuing in this range, and after it shows that test, it just goes below the automatic reaction into the SOW, which is a sign of weakness or show of weakness, right, in phase B. Now it bounces back up into that what is UT, which is the up thrust. Alright, and then it'll range a little bit some more, probably test again around the automatic reaction area, continue, and then it will up thrust again, right? And it'll get even further because we, as taught as retail traders, you know, trade double tops, trade the range, you know, it's always going to hit that resistance line. How many of you have hit that resistance line and just got knocked out? You know, you're just thinking, oh yeah, well, it's going to hit this resistance line. It's happened to me so many times I can't even count. And once I learned the Wyckoff method, I realized that there was something more to it. And I'm sorry if I'm all over the place on this. This is my first video on it. I'm not structured here. I'm just going over what is in my head, and I'm trying to figure this out. So now there is this third up thrust, right? This up thrust after distribution. This is the one that you really want to watch out for, because this is going to be your signal that something is coming, right? And then after that is what some people have also unloaded as the spring theory. Sorry, my phone is going off and I'm trying to do something here. So now after you have the up thrust after distribution, right, and you're moving downwards, you have this you have these springs, these LPSYs, your psychology levels, or your psychological levels. There's also your points of demand, supply, I guess you say. The last point of supply is what that is. This is actually what LPSY stands for, is your last point of supply. And so you hit that last point of supply, and then it continues on. It looks like it hits that other resistance line. It breaks below the the support line, breaks below the support line, creating a new resistance, and then it moves on. All right, and that's your full show of weakness. Now you're to enter somewhere around this first last point of supply. Now that being said, let's see if we can't go over to this Google chart and try to figure out exactly where it is, and if you guys can see it, shoot me, leave a comment, with a link or something to your trading view that shows what you see. But I'm gonna try to just walk through and see if I can't find it myself. It looks interesting, so let's see if we can't come up with something, or I can't come up with something on my own. And to be honest, this is for more my education than anybody else's education. I'm just doing this for myself, and if you guys are here to help me, hey, cool. I'm no educator. I'm just a learner, and I'm hoping I can get something out of this. I don't know. All right, so what I see here after this is coming through here, we get this. I guess you could say this would be the buyer's climax, right? It's becoming the highest point, and it's a huge wick, right? It's a huge wick to where it's probably saying, well, it can't get too much higher than that. But you have a lot of sellers in here. Their sellers are trying to push this up, but evidently the price is too high, right? The price is getting a little bit too high. For the supply. So now it looks like we come down here. It looks like this is definitely your automatic reaction right here, because look at this, it comes straight down, smacks the resistance, right? So look at this. So I'm going to go ahead and draw a vertical line here, or sorry, horizontal line, and it looks like this could be the automatic reaction. And I don't know what just happened, but whatever. Sorry, computer. Automatic reaction test. All right.
Don't worry about it.
Alright, so now it moves off to this automatic reaction test, and it looks like we are creating also some kind of trading range right through here. Right, smacks here. Looks like we have a trading range right through here. Now, this is one thing I don't understand. I just don't know if all the schematics are a little bit different, or if we have to read them differently. But right here, we just have this huge up thrust. Maybe this is the initial up thrust, and cancel. This is the initial up thrust, right? And maybe it was just a weak one, right? Maybe this is not, pitch perfect how the schematic is going to play out. Up thrust. Up thrust here, right? There isn't much of a sign of weakness, it's actually showing more strengthness, because we actually have another up thrust. So this looks like this could be, I wouldn't say up thrust after distribution. Maybe this is just another up thrust, because there's not much distribution happening in between this up thrust and this up thrust, right? Now what does happen is it comes down, and what we thought was this, little low right here, this little this support, well, all of a sudden it became another support, because it broke right through that one and wick these people out. Now the whole point of the Wyckoff theory is that the big bankers, the big money is into play, right? And all the retail traders are in here, right? Retail traders, just throw a little box in here. This is where all your retail traders are. They're trying to catch this move here. Maybe they think this is what's going to take them up, because they see these parts right here, and that's going to take them up, and they see it starts going up, so they keep buying, and then all of a sudden the big money comes in and says, nope, that's not the way it's supposed to go. Boom, they take it way down. you know. So the big money is in here playing these games against the retail traders, and the point of this is to understand that this is happening, and we're trading against the banks, or we're trading with the banks, I guess you could say. Now, so that being said, the banks took out these people, right? So these people that had their stop losses set up here, you know, they took those out, and now all of a sudden these people start buying. Well, then they started selling, so they took those people out too. And what that does is that created a lot of money. There was just money sitting up here, and they just wiped all of it out, right? They took all of the retail traders' money just by doing this, right? And they did it a little bit here too, right? They took a little bit of it here. They went down below this resistance point because everybody is playing in this level field, right? So now what does Wyckoff say? Well, if we go back to this image here, right? So it definitely doesn't look like hardly anything, except for maybe it's just playing out a lot faster than what we thought it would. So we had that little up thrust, right? And then maybe we had that up thrust after distribution, and then maybe we had to show weakness really quickly, right? And then it came back, and when it came back, right, it hit that one perfectly. So now, from everything else I've said, is you always look for you always look for that last candle, you know, before it's going to go the opposite direction. So right now, we do not know which direction it is going to go in, right? So if we just take this here and we do a replay bar from here, right? And let's just say we have no idea what's going on, right? Well, we knew it took this, we knew it took this. Now we're sitting here going, so, alright, so what happens next? Right? Alright, so now these things start playing all these candles that start happening up and down, up and down. Which way is it going? Which way is it going? Let's see if we can find some kind of massive movement in here, right? That was some big movements to the downside, right? Some decent movements to the upside. Did you see that? It created equal bottoms right there. I'm going to hit pause. Actually, I kind of want to go back a little bit. Oops. Yeah, I want to jump back to there. So now we've got this, right? Maybe we'll work this out a little. Now we've created a new trading range, right? We've got a new some new bottoms here. So now everybody's thinking, well, definitely gonna go up now because, you know, all these wicks are coming down here. The price is pushing up. The price is pushing up. All right. So if that's the case, what I'm expecting, especially for the banks, is that the banks are going to push through this, right? The banks are going to push through this to take out all this liquidity. There's more liquidity sitting underneath here after I see this, right? So let's hit play. And sure enough, there was that big move. There's the big move right there. There is that big move to the downside. So this tells me that because this move just took out all of that liquidity that was sitting over here, that show a weakness, or that show of strength. That being said, I think this candle is going to be my candle of interest, right? Because the banks definitely got around to that point to where it was about an equal low, right? And the banks played games. The bank said, "Oh, well, we'll let you guys go, and think that you're gonna have it." And then they came right here and they just took everybody out. So what I want to do is I want to draw a horizontal ray on the bottom of this candle, right? And I want to see if something happens from this candle on, right? So let's hit play. Alright, slowly going back toward, nope. Okay, so now we get back to the bottom of that range, comes back up. Oh, look, touches that. It touched the bottom of that candle. So the banks could have easily came to that area, unloaded those last positions that it had in that candle, and then decided to move on. Now, if that's the case, let's continue watching this play out. But it looks like now we're at the bottom edge of this resistance, and it's playing. There we go. Now it's starting to drop. I'm gonna get rid of that because evidently this is already played out. Comes back up right to that same point, and then drops. See, I'm honestly learning. I did not know this was going to happen before putting this together. Comes back up to it, wicks it. It's still unloading some positions. Drops right back out. So evidently that was our point of interest candle. Now, another thing about Wyckoff, let me hit pause, is that they say that it usually doesn't go any further than halfway in between your candle of interest, right? So the way you measure your halfway point is you're going to do your fib, right? You're going to do your fib in between the full body of the candle. Now this is my regular Fibonacci. Let me actually have a different template, what I call smart money. Right, and what I'm going to do is I'm going to zoom in on this, move this out of the way, and it's at the bottom pretty much, yeah, and this is at the top, a little bit over the top of this up candle, right? This is the candle of interest that we have. So and look, as you can see, that just right at the bottom of it. Sometimes it'll hit the wick, it just depends. Most of the time they usually say go from the body, but recently what I've been seeing out of things is I've been going from the wick. The wick usually tells me a little bit more than everything. The body just says how much volume is in that candle, and that's usually where the smart money is. However, they could, and what I've been thinking recently is that the smart money could throw a couple lots in there. They could make it look like that they're the ones not playing in this game, and then also let the retail traders play along with them until it gets there. So they could still have positions in these wicks, and that's why I like looking at these wicks. Now, whenever it does come to going, how far it won't go, it definitely probably won't go any farther than halfway through the wick or halfway through the body of the candle. I still believe that. So I'm going to throw a ray right there, right? And this ray is going to go right through the middle. Right, it shouldn't go any farther than that. Alright, let's back out of here. Because so far, we're true, right? Look, and even this second wick came right directly to the half part of that candle. It didn't get any farther than that candle. I'm gonna hit play, and we're going to continue watching this to see how it plays out. So the point is, the point of these is your entry is going to be the body of the candle, right? and your stop loss is going to be just above the candle. The whole candle is going to be your zone, right? Your entry zone, and it shouldn't go any farther than the body of that candle. All right, so looks like it did. Hold on, let me see here. Something happened here. So your exit, your stop loss would have been here. Alright, so we have something going on here. Let me get rid of that. Now the thing is that with this candle, you do have something interesting happening. Is that even though the wick may have gotten outside of the body of the candle, let's see where the wick went to. Right? It went to right here. It went to the body of this candle here. So it looks like the big money makers could have still had some positions in here, right? So the thing about these is that if you are going to make the trade in this, right, have some targets, right? Have some targets, and it looks like your first target out of this probably would have definitely been here. That would have definitely been target number 1, because that is the bottom part, right, of your resistance zone. I wouldn't even go to the first resistance zone. I would go to the second resistance zone, because if you see this big of a candle come out of it, why not, right? All right, your second target. Let's look to the left to see what our second target would be. It looks like there was some accumulation right through here. Usually go about halfway through the accumulation. Let me see if it goes there. Boom. So, of course, that would be target 2. Unfortunately, we didn't hit a target 3. So, if you would have made the trade off of that, off of this alone, the bottom of this candle or in this candle, you set your stop loss above here. Look, you would have, you hit your target number 1 for sure. Right, it goes right through it, backs up a little bit, goes down, hits your target number 2. If that is the case, right, let's just say you put your you put your entry at the very beginning of that candle. So the very beginning of that candle, not even the wick. I mean, you could have done multiple entries if you'd have done the wick. If you'd have done the wick, you could have got here. You could have hit, this target. You could have set your entry again, hit target 1 again, set your entry again, hit your target 1, and hit target 2. There's 3 plays that you could have got just off this one, right? Just off this one candle of interest. And the candle of interest I am talking about, let me get rid of that really quick. Candle of interest I am talking about has been this one right here. A little bit bigger than I wanted it to be, but this green candle right here, that green candle right there is your point of interest. Why? Because first, it wipes out all this liquidity, right? You've been playing this game to where you got all these lows and and then it comes back up, wipes out all this liquidity, hits probably the equal low, right? Plays games, make people think that they're going to be able to come up out of this and just skyrocket, and then it stops him and it takes him way back down and it takes out all of that liquidity. At that point, big money's into play, and that big money is going to take this thing downward, right? And so it did. And so this is the candle of interest. And so we set up our entry points from this candle of interest. We could have made, like I said, one play, right? And that your first play, right, from the wick here, right, to your target here. Look at that, 185 pips. 185 pips. Just from that one play. Right? Let's say you took your profit, you set it up again, And you got to think that your stop loss, right? So the whole candle, you go from the body of the candle, and if you want to go from the entry of the wick, you can. So let's just say that's your so it's a 75 pip candle, right? So if you think about short position, start from here, you go from here, and this thing I like about this is that your risk to reward rate ratio is usually fairly big, right? It's usually a fairly big risk to reward ratio. Let's just say if we went to target number 1, your risk to reward ratio was 2.37. That's not too bad. We want it to be a lot better, but generally that's not too bad. But let's say, but if we had 2 of them, which we did, that's even greater. So now we hit 1 target, then we did it again, right? We hit this target again, we set it right back up, and now instead we hit, let me see here, bring this down to here, set this to here, and this time we hit target number 2. We hit target number 2. Risk to reward ratio was 4.52. Right? Now, here's the thing, is that we probably could have got better entries, right? And how you get better entries is that you look closer, right? You start taking a look at different times, right? So now, that one candle I was talking about that drove up, right, that faked everybody out and took it right back down, is actually this candle right here, this tiny little candle. So what it did is it drove up really quickly, right? I'm sure if we watch this play out, especially on a 3 hour, right, it just drove up really quickly, and this candle went like this and then shot right back down. So that being said, your actual, and you can get rid of this here, this could have even been a better risk to reward ratio, right? So let's just go ahead and throw it on a short position here, right? And let's say we hit the short position from here down to here, and we went for that first target, which was here. Now your risk to reward becomes a 3.2. At first it was a 2 point something, right? And now you're risking 57 pips instead of 75, right? Oh, we went back and I just completely undid all of that. That's okay. I gotta stay over here. And let's just go back from here. I'm gonna remove that. So, but that's the thing, is that's this candle, right? And that's that candle that you saw move up really quickly. And take all those out. Now, let's just say, let's see if we can't get a better entry, right? Because we knew that was the candle of interest. We're still taking a look at that candle, right? Let's go down to the 2 hour, right? All right, so I still like the 3 hour better, right? Because somewhere within those 2 hours, it was still making that good push up before it went down, right? So I like that 3 hour. That 3 hour, it just seemed to make a lot more sense because it did have that huge wick up. Let's go down to 1 hour. Maybe even 1 hour total or something. And I think it did. And usually what you're looking at, you probably could have tightened it up to these wicks here, right? Because you're looking at that 4 hour, right? So all that 4 hour candle that we were looking at, 3 hour candle that we were looking at was all in here. The wicks got a little bit tighter, and also that got a little bit tighter. Now, the only problem is if we had done that, probably got outwicked out of our second one, of our second entry. But if you had kept it from wick to wick, we would have been fine. Alright. So now we have a smaller risk to reward ratio. Not only on 2 entries, but on a third. So now let's just say we hit this third entry here, and we went for this second target. Actually, yeah, I forgot what targets we were even going for now. One target, 2 targets. Third target was just below here. That's what it was. So twice we hit. Move this over. That's right, so twice we hit target 2. There. So you have a 3-2-3 risk to reward ratio. You set it back up again. You hit a 3-2-3 risk to reward ratio. And then you set it back up again. And the entire time you don't hit your stop loss. You could have just been taking a set up multiple trades as you kept going along. Now this one, considering it's still going, let's see here, let's hit play. Now it gets close. And yeah, you would have hit your third target. Look at that. This time, let's just go ahead and take this. Right. Grab this. So I'm having trouble with trading view. Now you hit your third target. Third target is a 6-to-1 risk to reward. Right, 6-to-1 risk to reward. Risking 55 pips. Right, you're taking 324. That I would say is a fairly good trade, considering you also hit 2 trades before that, hitting 2 targets again. So that point of interest was definitely the point of interest that we were supposed to take a look at and that we needed to take a look at. Now that we have hit our third target, usually what you want to do, you know, always leave especially once you hit target 3 or at least 30 pips in, you want to bring it to break even. right? That way you don't lose anything that you've already gained. You know, you've taken all your profit. Especially if it enters back into this zone, I would say somewhere in this zone, it's probably playing out this Wyckoff method again in here. And that way you can know it's going to continue going on down that way. But I think that that first point of interest was a good telltale sign that it was going to happen. Now, let's continue playing and see what happens. Speed up here a little bit. Because now it goes through, right? It goes through, right? That was our entry and stop loss. So now those points are no longer. We have something new to look at. But this could have just been another up thrust after distribution. Because to be honest, what we're looking at here is the 1 hour, right? If we want to take this EURCAD and go to the 4 hour, and we want to take this point of interest, and after it hit, right around the point that it hits our third target, right? We want to watch this play out. Boom, it hits our third target. As soon as it hits our third target, it moves up immediately. I want to take a look back here. So that was a point of accumulation. Or I guess you could say that was a very strong, you know, support line. That was definitely a strong support line. You know, all the way down across. Look at that. So that's why I decided to shoot back up. And let's continue playing this to see how this plays out. Right. And the thing was is that it just went through, you know, that candle of interest right here. It went through that candle of interest. And it hit there. Now, I don't know if there's anything that we can look at to play off of from that candle, right? But let's take a look. Let's go a little bit in deep dive and find out. Because let's just say you know, went through your stop loss, or you were waiting to see if you could enter again coming out of that zone. Yeah, you couldn't. You couldn't because it went through your stop loss. And where was it? It was right there. Sorry, I hit a different pair and kind of screwed me up. So this is the wick here, right? That's the wick there. So let's do. Usually something happens. Let's do here, and let's take a look at what happened. Why did it go to this wick? You know, after we had hit this went through this, and then got to our third target, right? And took all our money, set our you know, our entry to our stop loss to a stop profit. It goes above, right? It goes above, but it's still continuing to play this down game. So now it goes to the previous candle. Right, that previous candle that was up before that push down. It may not have been a major push down. There was an up before that push down. Now here there's even a smaller amount. Well, I guess it depends if you want to do from wick to wick. One different wick to wick, that's about 78 pips, but a lot of people just like to do the candles. So if we were just to do the candle from the wick 35. And then again, if you know, if we wanted to, let me just put a marker in here to know which candle we're at, because it was this one here, right? We wanted to investigate a little bit more. Let's go into the 3 hour. Usually big money plays on the 4 hour and the daily chart, but you know, usually we can see their pushes. If they're going to start putting in some money, it's going to happen at the very beginning of that candle, because as soon as they put their money in, that's what's going to cause that candle to shoot up, right? So even though you can see the big money in the daily candle, they're not putting all their money in the entire day. They're going to put it in a specific time of the day, and when they do, it's going to cause that candle to grow, right? So before it was this candle, right? Before this was the candle, before everything just shot down, and we were making all the money off of this candle. Well, now it jumped up, and now we have this candle. This was the last candle before the next time it shot down. And generally, that's probably what I would have done, was set my, set my entry. I probably would have done the wick, set my entry along the wick. Because look, it snipes that wick, and then boom, takes off again. And now you hit your targets again. And it just can, and now here's the thing, now it just continues to hit those targets. Now these are the points of interest, right? This is the last big push up before this one goes down. So now I'm looking at this one, right? I'm going to look at this one to see what happens. Wicked it. Wicked it, you hit another target again. Now you hit that one. Here's the thing I don't like about this one, is that you have this massive candle, right? But then again, you're still having some kind of trading range here too as well. So you wicked it. This comes back up. It probably flirted with your line before you come back down, and you actually take profit. So I'm gonna look at this candle here. This is gonna be my point of interest, and it's not a very good one, as you can tell. Because if you look all the way across, it would have hit my stop loss. But well, yeah, let me think about this again, because I don't know if I would have entered here. There would have been no point to enter here, because you've already entered on this one, right? And this is where your entry would have been. So now, after you've entered, you wait until you hit a target. Wait until you hit a target. That would be my understanding of this. Wait until you hit a target, and then wait for another test. You hit a target, right? So we did hit a target. Now we're waiting for a test, a push up. Boom, here it is, right? Now I've also seen a couple different things out of these, right? And hey, we're actually looking at the 3 hour, so let's go back to the 4 hour. Right, and so there's that candle I was talking about. And there's got to be something here too, well, I guess there's a lot of imbalance here. There's probably a ton of imbalance here, right? Like this candle right here is full of imbalance, so eventually it's going to have to come back to this candle, right? And that's probably why you see this wick up here. It goes up to this wick, and then you hit this target. There's probably so many plays that you could have got off of this just one move, all because we saw that one, all because we saw this play out. It got into this Wyckoff method, this Wyckoff theory, after it just got done coming up from this huge, kind of just whatever was happening, and just kind of ranging, and then all of a sudden, the Wyckoff method happens, and you're just making tons and tons and tons of money off of this, right? But here was the thing. Like I said, I had recently got a signal, right? My signal is, I think I said it was 53585 or something like that. Should have been down here, or 53585. I don't know exactly what, I forget the exact signal, but I know I barely missed it. Either way, you can still kind of see these playing out through here. And let's just see that last push, the last up push here. Let's just mark this one, right? And so this comes up, or, that could have been the one where you entered. The one where you entered. Now you're looking at this candle because it's the last push up. Now I guess, if you're going to be playing that one, you might want to be looking at that wick. Because if you're going to enter here, you're going to do a good job entering, right? Because it does play off this twice, hit your target. You may want to think about just getting out of that one then, if that's the case, because now you hit 2 targets again, and you keep hitting the same targets over and over and over again after this up thrust. And even then, your entries are on the targets as well. Look at this. You can enter on these targets. Now, I'm not for 100% sure if that's how Wyckoff theory is, but I know that EURCAD has definitely been one that I have watched a lot recently, and I've made some decent money off of, just because I've been seeing it going into these same areas. And I can't say the same about some of these others. Like if I look at USCAD, I'm trying to figure this one out. It's not playing out the same way, as EURCAD was. I'm not seeing those same huge moves that say the banks they're in this, and when they are those big moves, then it's not the same thing. Like this, like it's coming through here, then you get this one, right? You get this one right here. You get this up thrust right here, and then you get this huge bulky move down, right? So everything I've seen would have been, okay, place your, well, I guess they would have been right, if I'm not mistaken. Yeah, it looks like they would have been right. It just would have been a day later, because this came up, touched it, and then continued to move down. But maybe I'm wrong. Maybe EURCAD or USCAD, did have it in it. Anyway, I'm just rambling on and on and on, and I'm sitting here scratching my head because I'm just trying to figure this stuff out, and I'm making my own videos looking at these things, because I figured if I make the the videos trying to figure them out, then maybe that'll help me out more. Anyways, I hope me going through all that rambling mumbo jumbo and looking at these kind of these charts helped you out as well. Because that's pretty much how it helps me. I just kind of go through and see what happens, and I'll see. Maybe I'll probably be watching a lot more videos today, and seeing if I can't find another one to look at, and especially one that's coming up soon. Cool thing about Monday is that even we absorbed the 4th of July on Friday. I had to work Friday, so I couldn't trade. The cool thing about this trading method is that I can set up my trades ahead of time. And I can if they're right, they're gonna hit the entry points, and they're gonna play out the way they need to play out, and I don't have to worry about it because I'm at work. But the good thing about Monday is that I'm gonna be not working at my job and I'm gonna be trading. It's gonna be the first time that's ever happened. So I'm gonna be looking through through some charts today. I'm gonna see if I can't find one that's gonna play out on Monday that hopefully we can all make some money from. But anyways, that's it. That's me, and I hope you guys have a good weekend. And thank you from Tyler Edwards of Bodies and Wicks.